Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. All right. Hello, and welcome to yet another Value Podcast. I'm your host, Andrew Walker. If you like this podcast, it would mean a lot if you could follow, rate, subscribe, review it wherever you're watching or listening to it. With me today, I'm happy to have back on for the second time, Brian Finn. Brian, how's it going?
Good, Andrew. How are you?
Doing good, man. This is you were just on last month. I think you're setting a record for second guest appearance, but really excited to have you. I know we've got well, let's do disclaimer first. Disclaimer, remind everyone, nothing on this podcast is investing advice. That's always true, particularly true today. We're going to talk about two smaller, probably messier, though one of them's getting less messy by the second situation. So everybody should just remember, please do your own work. Nothing's investing advice. Consult a financial advisor, all that. Brian, you're coming back on because I think for two reasons. We wanted to follow up on OPRT, which was the first podcast you did, just announced earnings, announced a lot of cost cutting, following a lot of the playbook that you laid out in your letter and that and the podcast we did. Stocks performed really nicely, and I think you still think there's more to go. So we'll talk about that on the back half of the podcast. But the main reason I think we wanted to come on and do this quick follow-up was CUTR. The ticker there is CUTR. I just did a podcast on them last month. You and I have been exchanging notes on them. We think it's a really interesting situation. They just announced earnings, a settlement with two of the largest shareholders, a new board. I think the earnings call was absolutely wild. And you and I were talking, we're like, hey, let's just get another podcast out there because this is one of the craziest situations I'm aware of. And we just want to talk about it. So I'll pause there. You know, what should people be knowing about CUTR now and since the last podcast?
Yeah, well, maybe you guys covered a lot over the last podcast. I don't want to repeat too much. You guys went over a lot as far as the products that CUTR has and some of the board drama. But I'll kind of maybe start at a high level of sort of how we started looking at this. We were interested in CUTR because of AviClear and had done a lot of calls with dermatologists and had gotten great feedback on that. But one of the things that we heard in calls with former employees and people kind of been around the business was that this was a company that had a very dysfunctional board. And it was so dysfunctional that it was distracting to, senior level management and employees. So that was kind of a risk here. Now, what that was due to was unclear. Some of them attributed it to the presence of Dan Plants, who was the activist shareholder, who was the executive chairman. Others attribute it to other board members. The line that we heard on Plants was that he was excessively interfering with things that he would have to sign off on press releases and, almost acted like he was an executive within the firm. As we subsequently found out, didn't. I mean,
obviously, the last podcast we talked about him wanting to be CEO. I completely agree. And he even said in his letter, hey, I was spending 20 plus hours a week working on this company, like going to field visits, it's approaching a full-time job at that point, right? Like I'm sure you and I work more than 20 hours a week, but it's starting you're going from part-time to salaried once you're over 20 hours per week, right? Exactly.
But to Plants' credit, he did own a lot of shares and was highly incentivized to see the share price work here. So in that sense, he was aligned with shareholders. On the other side of this, you had the entrenched slate. You had two guys who'd been sort of more legacy board members, and then the three new board members who'd come on board. Within the last 2 years, they were the three women, Sheila, Julianne, and Widman. The issue with that slate was that none of them really owned shares, and while they did, as we sort of had conversations with them, they made a good point that, hey, look, Dan's a bad guy, or at least this was their point. Hey, Dan's a bad guy, and we can't let this guy who owns 6% of the company take the whole thing over. That's not in the fiduciary interests of shareholders. All right, point taken. But the problem was they didn't really own much in the way of shares. So it was hard to see kind of where their incentives were. They hired Kai Laffique from Sidley, who really is regarded as the best activist defense lawyer in the world. He's very aggressive, but he's very good at what he does. And that, I think, would install fear in the heart of folks who, are on the opposite side of him. So that, they hired a very good and a very aggressive lawyer.
One thing I heard on the heels of the podcast, two people reached out and they were like, "Oh, I saw this situation. I thought about getting involved, but when they saw the lawyer who was hired, they're like, no, it's really just not worth the headache at that point." So obviously extremely well respected on the activist defense side.
Yeah, I would not want to get on this guy's bad side, put it that way, having heard stories. So, they hired a great lawyer, but they were in kind of a weak position here in many respects. I mean, they didn't own any shares. Against them, you had, obviously Plants and Mowry, the former executive chairman and the former CEO. You had, the different employees that had written in support of Mowry and Plants. And then you had the 13D filers, Pura Vida and RTW, who'd kind of written, basically not totally neutral, but saying, hey, look, you guys, you need to keep Mowry, you need to not fire Plants. Like, let's get to a resolution here. Let's have the special meeting. In thinking about these different cast of characters, with Plants obviously thinking about trying to come on as CEO and having whatever incentives he has, these board members wanting to perhaps stay on as board members, because of the prestige and the money that comes with that, but not owning any shares. Really, the only side here that it made sense to side with as a shareholder were, the other large shareholders in RTW and Pura Vida. These were at least two big hedge funds that know the space and care about shareholder returns, and weren't angling to run the company. They just wanted to make money. So, in seeing them file their 13Ds, our hope was that you get to some sort of resolution with them, that the company would or the entrenched board would see the light and realize that their best shot of winning this battle was to align with those shareholders. And we finally got that. The problem is that it came late Tuesday night after the earnings. So, the messaging on this was all terrible.
You say after the earnings. I think it was actually during the earnings call it came. So
right. Yeah, maybe it was a couple minutes before the earnings call ended. So the whole thing was super bizarre. I mean, why couldn't they have announced this, at 4:00 on earnings or the morning of? The whole conversation would have been about this new slate and talking about what an amazing new slate this is and how this really does go a long way towards solving the issues here. You've got, I can go through each of them, but you basically, to think about it in kind of a basketball analogy terms, I mean, this new slate is like bringing on LeBron James and Joel Embiid and Luka Doncic, onto what has hitherto been a dysfunctional college basketball team.
Luka didn't even make the playoffs this year. You got to be careful throwing around Luka Doncic's name when he's not even making the playoffs.
Hold on a second. I just gotta. So I think it's important to kind of go through who each of these guys are. But rather than having that be what gets discussed on this call, instead we have what was a really bad earnings call, bad on a number of levels, from just the timid and tentative tone of the interim CEO, Sheila Hopkins, to the lack of guidance.
It was really strange because, as you said, timid. There was one point, I was wondering what the heck was going on, because how is she doing this earnings call while she this was, again, the press release with the settlement with the two major shareholders came out kind of halfway to, actually more 80% through the earnings call. And at one point somebody said, hey, they pulled guidance, and they said, we can't pull guidance. And they said, hey, we really depend on guidance or at least product placements to kind of think about this company. How are you guys doing? And she, an almost direct quote is, hey, I'm not familiar enough with this company to provide guidance yet, right? And the CFO left alongside earnings. One of the many members who signed something supporting the prior management. It's like the CFO left, the interim CEO from the board takes over, gives this really tepid call and says, I'm not familiar enough with the business. Like, I almost thought she was trying to light the company on fire during this call until like this. It was just very strange. Sorry to ramble, but that's been like sticking in my brain for 48 hours, and I had to say it or else I might have gone crazy.
Yeah, and I think if they hadn't announced the slate, the stock would have opened, way lower than where it actually opened. If they had announced the slate prior to the call and had the call be about, hey, look, this is where we're headed towards. We've got this new board slate coming on, and we're going to bring on a real CEO. Not this whole interim CEO situation. I mean, Sheila's just not the right person, not qualified.
So you mentioned the LeBron James and Joel Embiid coming onto the board, and I know there's one in particular whose background you want to describe. But one thing I thought was very interesting on the call was she said, "Hey, none of the kind of current board members, I promise to everyone, none of the current board members are going to become the CEO of this company." And I thought that was really interesting for two reasons. A, there'd been a lot of accusations that the current board members were trying to become the CEO of the company, but B, the use of current was very big in there because right after she says that, the settlement with the new Joel Embiid and LeBron James of the board come on. And I thought that was interesting to use current because I said, these guys do have good backgrounds. Maybe one of them is a high priority candidate, not just to become a board member, but to become the CEO. Probably not guaranteed because obviously not guaranteed because they're still doing a search. They could have just named them CEO to begin with if they wanted to, but it seems like that use of the current board members there instead of just board members. I was very, I thought that was very targeted.
Yeah. And I mean, this is all speculation. I'm sure we're still a whiles away from actually figuring out who the right CEO of this firm is. But the only thing another thing that did catch my eye was the fact that they named Taylor Harris as a special advisor consultant. William Blair also came out with a piece after earnings and after this press release, kind of noting that Taylor might be the one to be the next CEO. And if you just do a quick search on that guy's background, I mean, he's someone who, he's been a CFO of a number of 3 different businesses, each of which has sold for multiples of kind of, when he started to when the business was sold. So he did it with Myocardia, which was a clinical stage biotech company, developing treatments for cardiovascular diseases. That was sold for $13.1 billion to Bristol Myers. He did it with Zeltiq, which is kind of the best comp here, which is an aesthetic device company that did the whole cool sculpting, fat reduction device. He sold that for $2.5 billion to Allergan, which was roughly 6 times sales. And then he did it with Thoratec, which is another medical device company. And he sold that to St. Jude for $3.4 billion. I wish I could pull up the chart prices here, but each of these were all, multi-baggers for the investors that came in kind of when Taylor came on. So I think he'd be an amazing CEO candidate, and hope someone like him or someone of his caliber gets brought on. But I think what makes CUTR so interesting and why I think there's all this sort of agitas about gaining control over it is because they really do have a potentially game-changing product here in AviClear. And I think that's why, there is this whole, as you referred to it, kind of Game of Thrones power struggle happening to get control. Luckily, I think the guys that have the best, our interests at heart the most in these 2 different hedge funds, are it looks like now kind of like leading the or running directing the ship here, and bring on the right set of people who can have the right set of experiences to do what needs to be done to take advantage of the opportunity that AviClear presents.
And now, a quick word from our sponsor. Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time.
That all makes sense. I want to talk valuation, and like, I know one of the things I kind of regret that we didn't really dive into in the first podcast is I think AviClear, like, I do think we talked about how big AviClear could be, but if it hits its potential, this has like blockbuster grand slam opportunity. I know some people who think, hey, this is going to do well, but I do think this has a lot of, but there is one thing I want to talk about before we get there. The company is burning a lot of cash, right? And now they have a lot of cash on their balance sheet as well, but they're burning a lot of cash. And I think there has been some debate over, and there were 2 questions on the earnings call on this, and there was some analyst chatter after. And, if something gets asked twice on an earnings call, it's generally because people are worried about that. And it's, hey, you're burning a lot of cash. Are you guys going to need to raise more capital to fund this business? Because it's pretty simple, right? The stock has been roughly cut in half by all this Game of Thrones drama. If you're burning cash and you need to raise capital now, it's probably going to be pretty expensive capital. It's probably going to be pretty dilutive to shareholders. The company, I guess I'll pause there. Like, what do you think about the company's kind of cash burn and financing needs going forward?
I think the analysts I think it was Piper that came out saying they might need to raise cash. I think they're completely wrong. They've got plenty of cash. The cash burn is going down each quarter. So I really view it as a complete non-issue. I know it's kind of causing agitas among investors right now, but they have a couple $100 million in cash here. I think there's things they can do to maybe clear out some of the debt overhang. But that was one thing I heard. I didn't speak to the management team, but I spoke to an investor who said that they did mention that the cash burn situation is getting a lot better, and should subsequently get better each quarter. So again, I think this is what happens when you have an interim CEO who doesn't really know the street, a board. I mean, there's just all this stuff, agitas that's being kind of dealt with at the moment, where the communications about the basic things that are happening in the business are not happening the way they would normally happen.
It was just
one of the reasons why they need to bring back Dave Mowry, the former CEO, to at least provide some sort of kind of consulting arrangement and help improve their ability to do things like guide and to communicate to the street, because I think the street's totally wrong about the need to raise cash here.
It was just surprising to me because, as you said, I think they've got about $270 million in cash on the balance sheet at the end of last quarter. They burned 37-ish million in cash from operations during the quarter, a little bit more if you include CapEx. But they said on the call, like, hey, this is the peak burn period. And it makes sense, right? Like, you're approaching, I think it's 1,000 AviClears have been slotted. Like, yeah, you placed 1,000 products in the past year. Of course, you're going to burn cash, but now the cash should start flowing. And if you're burning cash even faster, it's because you're placing these products at an exponentially higher rate, which you would hope would be good for the business long term. And the stock would rise a lot higher. But if not, like, it does seem, it just makes sense that the cash burn should start coming down. I was just very surprised by the focus on that with 10 quarters worth or 8 quarters worth of cash burn at the peak in the bank account. I was just very surprised by that focus.
Yeah. I think that's the kind of communication that will hopefully get sort of cleared up and clarified here as they bring on a new management team, to bring back Dave Mowry.
You mentioned Mowry coming back, the former CEO and former chairman. The one hanging thread from this. So we've got the settlement with the 2 largest shareholders. We've got the new board. They've got All Stars coming back. we've got that in place at this point. It doesn't seem like, given the settlement with the two largest shareholders and that they agreed to vote for the remaining board members, it doesn't seem like you're going to have like mass exodus of the board or change of control. The last kind of hanging thread from the Game of Thrones style corporate is what happens with the former CEO and the former chairman. Like, it sounds like you think the former CEO should be brought back in an advisory role in some capacity. I don't know, because I think the company might push back. Hey, the Q1 results, which he was in there for most of, were, I don't want to say bad because AviClear did well, but it's clear that the sales force was still having issues. There are some other issues. Like, they might say, hey, look, it was time for a change. Why do we need to bring him back? We've got this all-star new board. Let's just move forward, not look in the past.
Well, no, look, I think it's right that they move on from Dave Mowry as a long-term, solution to running this company. And so there's no disagreement there. And they'll find someone great with a lot of experience, like a Taylor Harris or whoever. But the reality is that you need sort of a stopgap measure, that you need someone in there who knows the employees, who can keep the employees there, who understands the business, even if they're not going to be the person that's going to be running it for the next 4 or 5 years. They talked about the fact that they're still negotiating with Mowry and Plants. I have no idea how things end up with Plants, but I hope that he sees that this new compromise slate is a decent path forward, and he doesn't look to kind of torch the company and continue to fight. But I don't know to what degree he could even really do that at this point. But I hope that they do get to a resolution with Mowry. He does come back in some sort of capacity, and everyone kind of just sort of sucks up their egos and realizes that we got to like right the ship here, because there's a huge opportunity if we do so, and this company gets the right leadership to pursue AviClear the way it could be pursued. AviClear represents a step change in the treatment of acne. This isn't a treatment, this is a cure for acne.
Yep.
And it's a cure that's much different than something like Accutane, which, has all sorts of side effects and issues and reasons why, patients really shouldn't take it. This is a treatment that I think I could see AviClear being something that gets on TikTok, where you have teenagers showing how they took 3 treatments of AviClear and how they went from having acne to never having acne again, and this becoming kind of a viral marketing phenomenon. And dermatologists and med spas having to really need to get these lasers in place so they can do these treatments. I think that's what makes this so interesting and compelling, is that AviClear is a step change in the treatment paradigm here. It's not a treatment, it's a cure. And all the feedback we've gotten from dermatologists about the efficacy of this has all been super, super positive. Now, whether people will pay for it, how it gets rolled out, how it gets commercialized, those are all things that the new management team will have to figure out. But they have an amazing product here. It's better, than the other product, AccuClear, which is much more expensive and is permanently more expensive because of some patents that they had to acquire in order to make the product. So AviClear should be the clear winner from a cost perspective, from an efficacy perspective, and also from a customer experience perspective. It's just less painful than the alternative. So
I think that's a great segue into, look, they've got AviClear. And one thing that I think investors struggle with is AviClear released a year ago, right? They're just really getting into it. Did less than 5 million in revenue in 2022. They released, it is rapidly rolling out the products. It has the chance to be a winner in the acne space, but people, I do think, struggle a little bit with, hey, there's this super messy situation going on. The company is burning a lot of cash. Like, how do we look at AviClear and assign, specifically AviClear, I guess the core business as well, but how do we look at that and assign a value to it?
Yeah, I guess 2 things. Like, let's just take the core business. Let's say that does about 250 million in revenue. Those types of businesses might, at the low end, get like a 2x revenue multiple, which would put you at a valuation that's below where we're currently trading right now.
It would cover Yeah, I think that's right. Yep.
So, we're trading kind of with no AviClear upside. And I think that's because of all this board uncertainty, all this management team uncertainty. Do people stay on board and continue to sell these lasers? Do they leave and defect to other companies? Obviously, salespeople in this industry are, they're just going to go work for whoever gives them the best compensation. But to think about AviClear and why it's really exciting, you've got, the way we modeled it out, you've got about, call it 8,000 med spas and 8,000 derm clinics. So that gets you to, 16,000 potential places where you could place a device. They're at it was 900, I think.
I think that I had 1,000 in my head, but it's approaching 1,000. Yeah.
Yeah. So call it 1,000 right now. And they probably get to like 1,500 by the end of this year. Maybe they're just adding 1,000 of these a year. You can see, a couple years out, say by 2025, 2026, they're in, call it a quarter of the effective market here. They get to like 4,500 installations of this. If you have them doing, call it 1.5 sessions per device per week. Now, how this thing gets utilized, how it gets penetrated, how it gets utilized will depend a lot on, customer feedback and how they market it and how this new management team goes about bringing this thing to market. So there's a lot of
and
variables.
If there are people on TikTok talking about how the lasers have cleared their skin up and everything like that.
Exactly. But I think there's sort of a conservative case here where you get to, a quarter of the effective penetration. You assume, like a relatively low, per session, per device per week rate. And, you're already at, call it 250 in revenue. And this is a very high EBIT margin product. This is like a 50% EBIT margin product at scale. So, that's looking at 125 million in EBIT. Mm-hmm. I think there's sort of upside scenarios there. I think, this could easily be a 200 million or higher EBIT business, if it really catches fire. So I think, you're looking at between 100 to 200 million in EBIT for this business. Apply whatever multiple you want to that. But that could easily get you to, a stock price that's 5 to 6.
Let's talk multiple real quick. I mean, this is kind of like recurring medtech-ish type revenue. If it was doing 100, let's just take the low end to make the math very easy, 100 million in EBIT at kind of full scale run rate. What type of multiple do you think like peers would suggest this would trade at?
Good question. I mean, I had them at like 15.
Yeah. I was thinking 12 to 15 in my head. MedTech, acne's not going anywhere until they cure your acne, but then there's a new person coming who's got it. I was kind of thinking 12 to 15 in my head if they hit 100 million. So that would be, let's take 15. That'd be 1.5 billion. The enterprise value here is 500 million. The converts would start kicking in at some point. But I mean, you'd be talking about a 4 to 5x at minimum on the current stock price. And that's without giving any value for the core business that, as you mentioned, does have value that covers a lot of the enterprise value today.
Correct. Yeah. What I'd say about this treatment is that, right now we're thinking about this just in terms of our, like how many teenagers will want to go do this. But if this really represents a cure for acne, there are lots of adults that still struggle with acne or, get flare-ups occasionally. $3,000, never have to worry about that again, I think is worth it. They might not be in the market for Accutane or for other types of acne treatments, but if it's like, hey, you come 3 times and you never have to think about this problem again.
Yep.
I think I think the market's a lot bigger than people think. People that aren't in the acne market today, because they're not teenagers that are constantly dealing with acne, but people that, have had acne occasionally or still have sort of remnants of it, I think will get treated with this. Because again, it cures you versus treating you.
That makes total sense.
That's why, I think everyone has dollar signs in their eyes when they look at CUTR and they look at the potential, upside here that could be realized with kind of the right approach to commercialization and go to market strategy. So that's why there's been all this drama. All this drama has obviously caused the stock price to get killed, but kind of therein lies the opportunity. You've got, at the moment, it looks like peak pessimism. I mean, there's still no resolution on the management side. Me talking about Taylor Harris, it's speculation. We don't know who's going to be the new CEO. Sheila did not inspire any confidence in talking to investors. She's not, and she's a placeholder too. We still have the concern about people leaving the company, and do they get to a solution with Dave Mowry, and does that help stem whatever folks are leaving? People might still have concern about the cash burn, but I think again those have been over exaggerated. The sell side all just gave up on the stock entirely. We had a total capitulation after this earnings call. So to me, it looks like peak pessimism. But now we're starting to see kind of the right things in place. We've got this board that comes from two, well-respected hedge funds in the medtech world who, have our interests as shareholders at heart. We'll hopefully have a management succession plan here put in place shortly.
Yep.
I think moving forward, once we get past sort of all this drama, we'll have a much clearer sense as to kind of what the commercial potential of AviClear is. And that I think will start to bring people back into the stock who have been burned. And,
I just want to mention one more thing. I guess a couple more things. Like, look, it has been rocky, but I do think the fact you just had more than half the board is now going to be replaced and appointed by the two largest shareholders who are, I don't want to say smart money, but they are very large. They are very experienced. They just put more than half the board on, if I remember the number of people they did correctly. Like, this should be, whether you think the opportunity works out or not, this should be a board that is pretty focused on driving and creating value, right? Could be wrong. Like, maybe tomorrow we come out with a pill that solves acne in one swallow with no side effects or something, right? Like that is a risk. There's risk here, but you should have a board that's pretty focused on the business. And, I think it's pretty asymmetric once you've got all this fight. I think one of the reasons people are fighting over this is because they do see a lot of value and upside here. And this is going to be about the best line board you can think of after this changes. As you said, the LeBron James and Joel Embiid. Just two more quick things on the conference call that I had to point out. I will never get over when she said, "Hey, I can't provide guidance because I'm not that familiar with the business." It's like, okay, great. Good to hear the board member who's interim CEO, been here for a month, isn't familiar enough with the business to provide guidance. Awesome. Number two, I did love when, to your point, and I want to switch this to a risk factor in a second, but people were asking, hey, you had a bunch of executives sign a letter saying, keep the old CEO in charge. The CFO left just before the call. How are you guys dealing with turnover? And I loved when the interim CEO said, I'm looking around the room and everyone in the room is nodding at me and saying, yes, we've got your back. Like, this is great. It's like, yeah, you're the interim CEO and you're looking at people with direct eye contact. Of course, they're going to be like, good job, girl. Like, come on, what's going on? But I do want to ask, like, it's been less than 2 months since all this drama really started. Do you think that with the new board in place, hopefully a new CEO soon, like the turnover from this can be minimized? Because we are in launch phase. Like, if you botch a launch, that can have dramatic implications for the business longer term. The sales force can get motivated, retain, like all that sort of stuff. Have you kind of seen that, or you think it's okay?
Yeah, I mean, from what I heard, we had an analyst go to they had a big conference out in Vegas, like a big dermatology conference. And, we talked to different folks on these, who sell these products. They were all kind of like, look, none of this matters to us. Like, we're out here trying to place products. We don't really care what's happening at the board level.
Yep.
At least that was the color from those guys. I don't know to what degree that's true. I mean, I've heard in some of our other calls from people that have left, but these were more senior people. They thought that the board drama was just generally distracting. But I imagine if you're a guy and you're out there selling lasers, you care about making sales and getting commissions, and they put in a package to retain a lot of these folks that cost them about $13 million. So I think generally, the sales guys, the guys that are driving the ship forward every day, they're probably not affected by any of this. But you're right that I don't think that news call, that earnings call did not give anyone confidence in Sheila Hopkins' leadership. I mean, it was just not, she didn't seem like she had a firm grip on the relevant details here. From her posture and her tone and to the content of what she was saying. But the reality is look, that would be a major problem if she was the CEO going forward, but she's not. She's just a placeholder, and she'll, the sooner they get her out and bring on a real hitter, this company will be in a much different position.
Yeah. On the Salesforce, just, I guess my worry was, so Q4 last year, they said, hey, the old CEO says, hey, we had some problems. We were probably encouraging AviClear a little bit too much with our Salesforce and neglecting the core business. We've made some incentive changes and we think we've got that buttoned up going forward. Then Q1 this year, Sheila comes on and says, hey, the incentive changes we made at the end of last year weren't enough. We had to really go back and redo all the incentives, and we think we've got in place. She did mention a retention program, but we think we've got it in place now. It's going to be okay going forward. And I look at that and say, ooh, like normally I do think like the corporate boardroom drama gets overstated in terms of the effects it has on the underlings. It could have an effect on the people you're selling to who might worry the company's not stable. But here you're selling to doctors and you're selling, once they have the product, they don't care who kind of has it. So I have trouble believing that, but I just worried 2 different incentive changes inside of 4 months for the Salesforce plus corporate turnover. Like it does seem, as you said, these Salesforces are very in demand, always good selling people. It does seem like, if there was ever a time to see a lot of turnover and stuff, this would be the time. But as you said, we got the retention package in place. It doesn't seem like they've seen that yet. So hopefully they get the new killer CEO in here in the very near future. And then we can just be focused on, hey, AviClear, they're placing a lot of devices. We're just starting to see the revenue and cash flow coming. By the end of this year, cash burn should be down a ton. Anything else you want to talk about, CUTR?
No, look, I think the sooner they get someone like Mallory back in as a consultant, the sooner they get a real heavy hitter CEO, then I think, at least from a stock perspective, it should start to work. And then the longer term story here, there's massive upside if they get AviClear to really work. So I think, right now it's like the near term, the medium term, and the long term, I think all look good. Like I think the near term, just given where the stock's trading, it's just already, it was at a super depressed level. And then this board botched this whole announcement. So it went to an even lower level. But it's like, we know the ship's kind of finally turning here. And so I think in the short term, the stock should re-rate. And I think in the medium term, it should go even higher as they get these other pieces in place. And then in the long term, if this really works with AviClear, then you've got a multi-bagger.
Yeah, no, I'm with you. The interesting things to me is like, at this point, when we did the last podcast with Vince, all options were on the table. And now I do feel like we've narrowed it down to, hey, with the settlement, with some really good board members on here, I don't think the company is going to sell in semi-distress or in turmoil. I do think we're at the point where, hey, we're going to hire a full-time CEO and we're going to run this business for 2 or 3 years and see, if we're right on AviClear and how big it can be. The math on the stock is almost undeniable at these levels, right? And if we're wrong, we're wrong. But it does seem like a lot of the more tail things. Now, there was the possibility this board just tried to sell the company for a premium, and it might look silly in hindsight. But I kind of think we know what we're getting at this point, and you can kind of just safely bet on AviClear. It doesn't mean there won't be bumps along the road, but the math here seems pretty compelling to me.
Yeah, and the reality is, the base business provides, a margin of safety, and they also have lots of cash. They're not going to run out of cash anytime soon. The cash burn's going down. So I don't know. The business is going to do fine. Resolving all this stuff on the board level is what really mattered, and it looks to be resolved. And now we got to sort of follow the next couple of steps here.
Perfect. And hey, I just want to do a quick update on Opportune. So I'll include a link to the podcast we did about a month ago in the show notes. Obviously, you came out, you said, hey, look, the company, the main focus of the letter, and I believe this is the first public kind of letter to board you ever put out, was, hey, the costs here are absolutely outrageous. We need to admit our prior mistakes and cut some costs. And just a couple of days ago, the company released earnings. And I mean, credit to you, the stock's up nicely on it, but they said, hey, I don't think they're going as far as you suggest they could, but they're cutting like $80 million in costs. I think there's probably more room to go. they're winding down a lot of the things that you had said that you had wanted them to do. Probably not all, but anyway, I'm rambling. I'll let you talk about OPRT, kind of what they said on the earnings call and where you think we go from here.
Yeah, I mean, I guess the first thought is like, look, it's good that they did this cost cut. That helps show that they listened to shareholders. They listened to my letter, but it wasn't just, other people felt the same way. So I wasn't alone in advocating for this. I think this was sort of a universal thought about the company, was that it had been grossly mismanaged by Raul. The enterprise value had come down literally every year. The revenue had gone up. I mean, that fact alone should tell you that you've got a management team that's trying to grow an empire, but not thinking about shareholders. So we got them to stop building that empire and begin to curtail it. And the stock reacted. The stock was up. Now I think they could have gone a lot further. They're still doing a lot of stupid fintech stuff. I'm sure there are many people that are still there that shouldn't be there. It sort of remains to be seen how they really pivot back to kind of the specialty lending business, and taking advantage of the fact that they have this retail presence, they have these call centers, they have these assets that are valuable if they really spend time and exploit them, and away from kind of all of the sort of the glittery fintech stuff that's just been a stupid distraction and wasted lots of money. So I'm pleased to see that they're turning the ship in the right direction. But what will matter here going forward is how they actually execute on that. So I still don't think Raul is the right guy to lead this company. I still think the board needs to be pressed. I mean, I'm happy that they made this first pivot here, but the jury's still out on kind of how they execute. If they do execute, then this is a company that could easily do $3 to $4 in earnings next year. That should do that. And that should be, a $20 stock versus $5 today. So it's like you go out there and you fire a bunch of your silly middle management folks who aren't adding any value to the company. You stop spending money on these different fintech initiatives. You can generate a 4x return for your shareholders. Like, you should be pressing full speed ahead to do exactly that. It's annoying that, we basically had to metaphorically put a gun to their head to tell them to do this, and they did it. But I'm happy to see that they did it. I'm happy to see that they were willing to kind of think about it in kind of a constructive way. So I want to continue to be constructive with them and with my, to the degree that we have follow-up conversations with the board and with the management team. But, I think we reserve the right to press harder if we don't think that they are, as fully committed to this pivot as they should be. So, we put out a nice statement commending them for starting the cost cuts. Want to have a constructive dialogue with them, and there's no reason to be too antagonistic about this. But we were right about the need to cut costs. We were right about how the market would react to that, and we're right that they need to go further. And the further they go, the better the stock will react, and the better, the more viable the company will be in the long run.
I just want to ask one other question on opportunity. Look, obviously, this is a quote unquote digital bank, but they're digital banking products. They're more fintech. They don't have like bank deposits and everything. They're subprime, the unbanked. But I just had to, since we last talked, the regional banking crisis, quote unquote, has it's definitely spread, right? We First Republic went under. Pacific West seems to be struggling quite a bit. A lot of banks are struggling. Does that have, as they cut, obviously this is more a cost cutting story than anything. Their funding is fine. Like, they do rely on funding at external funding at some point. They've got credit lines and stuff, but does everything going on in the regional banking sector, does that have any impact on them, either on the negative side where, hey, it's going to be tougher to roll their funding and get all these lines of credits going forward and kind of warehouse your loans, or on the positive side where, hey, a bunch of banks are going down, banks are reining in their credit? That's probably more like business and loan and construction related, but on the margin, there's probably more on banks, and maybe that's more opportunity for these guys to underwrite loans, or maybe, what used to be a maybe they get a little bit more spread on their loans because there's just no one else or there's less competition for it.
Yeah, no, I think I've heard obviously both sides of it. I think generally though, if you have someone who's more of like a prime borrower who all of a sudden becomes more of isn't considered more in the prime borrow bucket, but prime lending goes away, then he's going to maybe seek to get money from more of a subprime lending source. So I think they can kind of upgrade their credit quality, the type of people that are borrowing from them in situations like this. The counter to that is obviously the macro environment's getting worse, and so people's ability to repay is getting worse. When thinking about their lending book, obviously the pre-2022 vintages are problematic, and will probably stay problematic, but they're being kind of cured in the sense that they're a lower and lower percentage of the overall book here. And the post-July 2022 vintage has been performing well. So it was really kind of when they made this big grab to increase their lending in 2021 that they kind of ran into trouble. So I think as inflation comes down and unemployment stays at a relatively stable level, these guys should be fine. The folks that they're lending to are folks that we still need more of these types of people, working in our economy. We might need less white collar service workers, but we do need more, people working at restaurants and in construction and the sorts of people that they lend to.
Perfect.
So I think from a macro perspective, it's fine, but those types of people are more affected by inflation. And that was always kind of the scary variable for people looking at this company was, well, if inflation gets way worse, how does this cohort do? And I think, at least for now, inflation looks like it's tempering, and the unemployment situation is fine for them. So,
and you and I are both in Tidewater, so we know oil prices have come down. Inflation can't help but come down, right?
Exactly.
Yeah.
And now, a quick word from our sponsor. Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time.
I haven't talked Tidewater on the call, not to put you on the spot, but I thought earnings were great. I did 2 podcasts, including one with the CEO at the start of the year. I don't think you and I have mentioned Tidewater on the podcast, but we got 2 minutes, might as well. I thought earnings were great and the thesis is right on track. Obviously, if oil goes to 20, like everything changes. But to me, it's been reassuring them. All the offshore drillers and everything have basically said, look, oil went from 80 to 70, but we've seen no slowdown in demand. Like the cycle is playing out exactly as we've been thinking. And I continue to think that's a massive positive.
Yeah, no, we had a call yesterday with with someone from Transocean, and we also talked to Valaris, and one of the things that we asked both folks was like, hey, look, just do the basic math here. There's a limited supply of these rigs, and demand has to be going higher just because of replacement, right? Even if we assume that oil consumption doesn't go higher, how does this not eventually get to sort of new build economics? The way this cycle has always ended has been because of new build, right?
Yep.
Like that's how it's always ended. And the color and the commentary that you get from these guys is that no one's building another rig ever again. And that looks to be right. The shipyards are obviously full. It's hard to get delivery. The prices are way higher. But you think eventually you get to new build economics at some point. You just have to, from a pricing perspective, because that's how these cycles always end. So, that would suggest that either we end up in a situation where day rates are at, like $1 million a day for a floater, and you see more floaters ordered, or they just have to stay at some super high rate for a very long period of time. But I think in both those situations, you win as an offshore investor.
I do hear you on that. I haven't done the math in a while. I think the setup's fantastic. I think Valaris and Tidewater in particular are really attractive. It's tough for me to see $1 million a day rate because which would be the thing that was kind of needed to incentivize new build, because I don't think offshore wells would be profitable at I think at current oil levels, like 650 is about where you could pay a day rate without really starting to question the returns from offshore drilling. So I don't know. I kind of think it's almost the best of both worlds, where you could have, as long as oil doesn't completely crack, right, which would obviously impact everything, but you could have 500 to 600,000 day rates forever-ish, because it's not high enough to incentivize new build because nobody wants to go. Oil would have to just scream higher, but 500 to 600,000. Run the math on these things, and you just keep them forever, and you kind of have the current fleet of drill ships, and that's what the fleet looks like. And maybe some profitable offshore wells can't get done because oil's 80, and it'd be great to have more drill ships, but you can't. So you kind of max them out at this 550, 600, 650,000 range. I don't know, I'm rambling, but what do you kind of think about that part of it?
No, I mean, that would be the Goldilocks scenario here, is that you have, you just have some extended long period of time where rates are above. I mean, they just need to be above 300 and you're good. We'll see. I think the key thing to watch here will be to see when you start to see longer term contracts signed. When you see someone like Petrobras sign a 4 or 5 year contract, at what rate do they do it? When do they do that? I mean, Petrobras is regarded as kind of the leading indicator, the best, most forward thinking customer in this space. So when they start to sign multi-year contracts at healthy rates, I think that's when you really know that you're going to kind of win no matter what in this trade.
Is Petrobras the leading indicator, or are they just the most aggressive?
I've been told they're the leading indicator. I've been told that they, where they go.
They are the leading indicator. I just don't know if they're the most innovative or the most aggressive, but either one works for me as long as we eventually get some 4 or 5 year $500,000 per day rates on the drilling side and stuff. Is Tidewater your favorite in the space?
I would say we're more heavily into to Valaris and NE, and Noble Energy. Tidewater is a great name too. I guess it's just easier for me to follow the floater and the jackup market, and it's easier for me to sort of see the supply situation there. OSVs and PSVs are obviously there's just way more of them, but Tidewater obviously can continue to go out and do accretive deals, and they've got a good management team in place, and they can generate the entire market cap of the free cash flow over the next couple of years. So that's also sort of a no-brainer.
I kind of think all of them work, but the thing I've struggled with in my head is Tidewater announced a very accretive deal. They're much shorter term contracts. The stock's up 50% this year, and then I compare it to something like Valaris, where the stock is kind of flat-ish on the year. The multiple's coming down, and I feel like the inflection is just starting to come. But this same thesis holds, and either of them probably work. I will say, people can listen to the podcast I did with Tidewater. I really like the management team and the control, and there is something to, hey, you might want to back the management team that you feel the most comfortable with, because that does end up mattering eventually. It's just a brainer. But look, all of them probably work. It's just the Valaris looks so cheap versus, people don't even give them credit for the Saudi JV. It looks very, very cheap. Anyway, Ryan, it's been almost an hour. This has been great. I really appreciate you hopping on, making the first record second appearance. People can follow up with you. Look, I'll include a link to the first podcast we did on OPRT. I'll include a link to the podcast I did last month on CUTR, and people can follow up with you on Twitter if they've got any questions on either of those. Or now I've introduced the whole offshore energy crowd to you as well, so we can go from there. Cool, but Brian, thanks for coming on, and looking forward to the third one.
Cool. Thank you, Andrew.
A quick disclaimer: nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.